Welcome back, budgeteers. Coach Nino Villa here, disciple of Christ, husband, father, and financial coach. And today on the New Money Habits podcast, I sit down with our friend and IRS pro, Christine Stevenson. Hey there, budgeteers. The new year is here, and you know what that means. It's time for fresh starts and new habits. If one of your goals is to get better with your money, New Money Habits has exactly what you need to kick things off right: the Payday Power Planner. This isn't just any budget tool. The Payday Power Planner is designed to work with your pay periods, not just the calendar month. Why does that matter? Because it helps you to see exactly when your money is coming in and going out. No surprises, no guesswork. With the Payday Power Planner, you'll know if you're working with a surplus or facing a deficit, so you can make informed decisions about your money. It's not just a plan, it's the clarity and control you've been looking for to start the new year strong. Make this the year you finally build new habits for financial freedom. Grab your free Payday Power Planner from New Money Habits today and take the first step toward a better financial future. Visit newmoneyhabits.com now, because this year it's time for a better plan for your money. All right. Well, thank you, Christine, for coming back on. I know it's been a while since we've had you, but welcome back. For those who are listening who don't know Christine, Christine is a speaker, author, and a talk radio show host. She has worked as a tax examiner and is a tax resolution specialist and a personal and small business finance coach. She is the author of How to Avoid Trouble with the IRS, 10 Best Tax Tips for the Self-Employed, Gig Worker, and Indie Contractor, and one of a dozen coaches who is collaborating with us on Patreon. Christine also is the owner of Proverbs 1616 LLC. So again, thank you for coming on. Happy to have you back.
Thank you, Nino. Great to be here. Great to be sharing some tips and tricks today with the listening audience. Just thrilled to be here.
And we appreciate it. I love the title of the book, by the way, especially that tail end when we're talking about gig worker and indie contractor, because I have experience doing that when I was a W-2 employee and I had some side hustles and did independent contract work. And I know you've been a wealth of knowledge for me, so I'm so excited for what you can bring to our listening audience. So why don't you tell us a little bit more about yourself, what it is that you do, and who you work with?
Absolutely. Absolutely. So as Nino was saying, I am a tax resolution specialist. And of all the things I do, that's really kind of my special sauce. That's my forte. And what does that mean? That means helping individuals, couples and businesses figure out their IRS problems, whether that's an audit or a notice, some kind of letter they've received from the IRS, or they have some questions about what's going on their tax return. Why is the IRS saying I owe X amount more dollars in tax? These sorts of issues. This is where I live and breathe and really, really enjoy helping people figure out those problems. Some of the other things I do: coaching. I love helping startup businesses in particular, such as side hustles that you mentioned. I have my original business was a side hustle business. And so I'm kind of practicing what I preach. So I love bringing that to new small business owners. Get things set up right at the beginning to avoid trouble with the IRS, which was the name of my book. And so I work in that capacity as a coach, and then just with individuals as well that are struggling with their money issues. How to budget? What is a budget? Why do we budget? Getting into some of those nuts and bolts. I was there once upon a time. I had no idea what a budget was. And through a process of many hours and struggles, I was able to figure it out and move forward from there. And so now I continue to budget. My husband and I, we budget every month. We have no debt, but we still set a budget, because your budget is you telling your money what to do every month. You are in control of what you do with your money. The things I help people with.
So very important to have a plan. You talked about your sauce is kind of the tax resolution. And sometimes it's obvious to somebody why the tax problem that they might have. Maybe they are receiving a letter, as you mentioned. But what are some of the situations that you see where maybe people don't even know they have a tax problem that needs resolving, because maybe it's not as obvious as like an audit or letters coming to them?
Sure. So while we are recording this in this time of year, the CP30 notice, this is a perfect example. The CP30 notice is now being sent out to, I don't know if millions of taxpayers, but certainly thousands of taxpayers across the country. And in that notice, it says, you owe some tax because you have an underpayment of estimated tax through the year. And so people are saying, wait a minute, I paid my tax bill on April 15th. I don't owe the IRS anything. Why am I getting this notice that says I owe $400 in tax? Well, this is very, very common. And people don't realize that throughout the year, you have to pay in X amount of dollars in tax. Most people do that automatically through their paychecks. They don't even think about it. And then they reconcile all this information on their tax return. They might end up owing some additional tax, maybe, $1,500 or more, 2,000, 3,000. I've seen 5 and 6 figure amounts of tax due from very high income earners.
Mm-hmm.
But the reason people owe this tax is this penalty is what it is they didn't pay in enough tax all year long through their paychecks. And if they have a side hustle, for instance, and they're receiving 1099 income, they didn't know to pay in some extra tax, that estimated tax payment. So there's this combination of, do we need to adjust the W-4 at the place of work for the husband and the wife? Or, if it's just one person, maybe they have to adjust the W-4 to increase how much tax is coming out of the paycheck, which sucks. No one wants to pay more tax because that means less tax in your pocket. But this is an adjustment that people aren't aware that they need to make. And this happens year in and year out. And they say, I don't understand why I keep getting these letters from the IRS penalizing me, even though I paid my tax bill in full by April 15th.
So let me clarify a couple of terms just in case anybody's following along and they're like, oh my goodness, wait a minute. So W-2, when we talk about a W-2 employee, we're talking about somebody who is employed by somebody else, that they wouldn't be considered self-employed or independent. This is most people who work.
Most people are W-2 earners,
right.
wage earners.
And so I'll circle back around to 1099 in a moment, but for a W-2 regular income earning employee, are there certain thresholds that they should be thinking about? Like, when does this penalized, what did you call it?
It's a CP30. It's notice CP30. It's a letter, and that's the particular name of it, CP30.
Yeah. Is there like a threshold? Like if I underpaid by $1,000, am I getting this notice? If I underpaid by $5,000, is there a threshold or a percentage to income?
So there is a dollar figure, and it's $1,000. Wow. Generally speaking, if you owe more than $1,000, you will probably get this letter from the IRS. Now, there's a couple of caveats to that, as in most things with the IRS. And I'm going to throw some information out, and it's going to go, over most people's heads, but that's okay. But what I wanted to mention about the CP30 notice, that underpayment penalty letter, the way to avoid that, there's three possible opportunities. That's when you owe less than $1,000 in tax after subtracting out any withholding or any credits. So that's the under $1,000 that you owe. Or you paid at least 90% of the tax for the current year. So if your tax bill is, $10,000 and you've paid $9,000, you owe $1,000, but you've paid 90% of the current year. And then the other rule of thumb is if you paid 100% of the tax shown on your return for the prior year. So let's say in 2024, you owed $10,000, and in 2023, you owed $8,000, but you paid $8,000. You paid all of that on the prior year return. Then you're going to avoid that penalty this year, even though you end up owing more than $1,000. And there's a special rule for high income earners. It's 110% of the tax on the prior year return.
So to kind of say that back in layman's terms a little bit, if all of a sudden I got a new job that is paying me far better than the job I had last, and all of a sudden I might find myself owing more in taxes because I'm also getting paid better if in 1 year, let's say in the year 2025, I paid into federal income tax $10,000, but I owed 15. So there's this $5,000 underpayment. But the year prior, I only owed $10,000. And so I've now paid the same amount this year as last year, but there was, this
this gap,
new job, circumstance that got me to experience a gross underpayment, but I wouldn't be penalized in that first year because of new circumstances.
Because
and
of the new circumstances, and more importantly, because of last year's circumstances.
Yes. Okay.
Yes, that's it, in theory.
All right. And then I know you used $10,000 and $9,000 for the 90%, but if we even doubled that, if I owed 20, but I paid 18, again, I have more than a $1,000 underpayment, but because I paid 90%, I'm okay.
In the current year, yes.
In the current year. Very interesting. Very complicated. All the more reason to sit down with Christine and make sure you got all your I's dotted and T's crossed.
Exactly. And I will create a little instructional video with some pictures, and that will go in the Patreon.
Fantastic. And we'll make that available on our Patreon, and that'll be awesome. Okay, so we talked about W-2 and kind of redefined or clarified and defined that. So 1099, again, just another tax form that people are receiving, but they're receiving this when they are self-employed. They're an independent contractor, and they're doing some work. They're being compensated. But what makes a 1099 different from W-2?
Great question. The answer is 1099 income has no tax withheld. It's 100% income to you. Versus what's on your W-2 does have tax withheld and sent off to the IRS on your behalf from your employer. So if you have 1099 income, you are responsible for figuring out, how much tax do I need to send in? And that's called an estimated tax payment. And then actually getting it to the IRS. You have to write a check. You have to send, do a direct deposit, a direct debit from your account to the IRS. I mean, there's mechanisms in place to actually make that happen. You are 100% responsible.
Now, tying this to this CP30 notice, in where maybe you got penalized for not paying enough in federal income tax, how often are you seeing that that's tied to independent contractors and gig workers who might be driving, for a ride share or a delivery service? Yep.
Yep.
And they have a significant underpayment because of that additional income in which maybe they haven't paid taxes on yet. How often are you seeing that?
I see that, I would say, frequently.
Mm-hmm.
Not all the time, not sometimes. I would say frequently. Okay. So, and where this comes from is, in full disclosure, I have my side hustle today is working for a small tax company, private tax company. And I have an opportunity, as I work with them, to chat with people, not businesses per se, but people. Many of them have these side hustles for rideshare, all sorts of graphic designers. I mean, you name it, I've seen it. And their rideshare is very common. And sometimes they make just a few $1,000, which really doesn't, turn their tax return upside down. But sometimes they're making 10, 15, 20, 30,000 in rideshare income. And they only have a few expenses. And they've not paid in any kind of estimated tax to the IRS. So they have this huge tax bill for being self-employed, considered self-employed. Again, they're 100% responsible for that tax. Gotcha.
Hey there, budgeteers. Good news can only be good news if there's bad news. So, what's the bad news? The bad news is you and I have a deadly disease called sin, and this disease causes us to rebel and disobey God. See, God is holy, righteous, and just, and he cannot be in the presence of sin. So this horrible disease of ours separates us from the God who created us. And the bad news gets worse. There isn't anything you or I can do to make ourselves right with God. We are dead in our sins and on our way to an eternity separated from God. But that's not God's will for us. See, for God so loved the world that he gave his only begotten Son, that whoever believes in him should not perish but have everlasting life. God did what only God could do. He made a way for us to be reconciled to him through Jesus Christ. Jesus came into the world to save sinners like you and me. While we were still sinners, storing up God's anger against us for our rebellion and disobedience, Christ died for us. Jesus took the punishment that you and I deserve and have earned. Jesus is the substitute for your punishment and mine. Now, isn't that some good news? The word gospel means good news. The gospel of Jesus Christ is that you and I broke God's law and Jesus paid the fine. When we place our faith and trust in Jesus, we get to experience God's grace and mercy. Our gratitude should turn us from our rebellious and disobedient sin toward God, seeking after him and his righteousness. When we do, God gives us a new heart and a new mind. Praise God for his goodness, and remember, God loves, humans sin, Jesus saves. So what would be your best advice to somebody who does, and if there's a threshold that you would encourage? I was about to throw one out. I was going to say, if they make like $10,000 or more doing, independent contracting work like rideshare or food delivery, but maybe there's a lower threshold of when should they start making payments, additional federal income tax payments, and how would one go about doing that?
So working in reverse order on that.
Okay.
How you do it is pretty simple, actually. I like to tell people to create an account at EFTPS.gov, the Electronic Federal Tax Payment System. You can set up an account. It's free, and it's very simple to do. And they set up that account, which allows them to transmit money to the IRS to make these tax payments, these estimated tax payments. That's actually the easy part. Because when you set this account up, you are required to link it to a bank account.
Okay.
So that mechanism gets put in place. So that's the easier of the two. In terms of a threshold, how much are you making before you need to be sending in a tax payment, an estimated tax payment? That's a little more tax planning, but I like your $10,000 threshold. Because most people I find that are doing rideshare, and that's just such a great example, they're also doing something else. They have a job.
Yes.
Part-time
9 times out of 10.
Yeah. So they're already making income from that. And $10,000 is enough that it might actually push them into a slightly higher tax bracket, and or it's going to cause them to owe some self-employment tax, just the $10,000 all by itself. So it's a really great threshold to really make estimated tax payments.
All right.
At 10% as a minimum, $1,000 at a minimum, sending in $1,000 worth of tax payments.
Yeah, because it gets convoluted, and I know that this is just riveting talk for everybody, but it's important, right? It's also so today it is so common for people to have these side hustles for the extra income, and to be thinking about and to be mindful of, how is this going to impact my tax situation? It's one thing if somebody is used to getting, let's say, a $4,000, $5,000, or even $6,000 tax refund because they overpaid. Well, that first $10,000 that you make in rideshare, whatever additional taxes you owe is going to be covered by the fact that you habitually overpay.
Right. Yes.
But if you're somebody who doesn't experience a large tax refund or even owes each and every year, well, then of course, additional income is going to lead to additional taxes. And so being mindful of, I should probably pay taxes on this income sooner rather than later to avoid any additional penalties for underpayment. And again, I don't think we can overstate how uncommon or the lack of tax literacy there is around underpayment penalty.
Yes, most people don't know about it until they get the letter, that CP30 notice, for sure. And most people that start a side hustle, like again, rideshare is so common. It's such a great example. They aren't thinking about, oh, how will this affect my tax return? They're doing rideshare because they need income to pay off debt or do whatever it is that they're doing. So that's why we're doing this.
Just make ends meet nowadays.
Just make ends meet. Exactly. And they're not realizing, well, there might be this consequence down the road. I was that way. I had no idea a rideshare didn't exist when I became aware of many things involving taxes years ago.
Mm-hmm.
And this is actually part of the impetus for writing this book. It was targeting the gig economy that really kind of came out of COVID. It was there before, clearly, but it really took off.
Oh, for sure.
COVID years.
Absolutely.
Post-COVID.
And so what would you say are I know you have 10 best tax tips, but what are your top 2, maybe 3, especially for the gig worker who is doing rideshare or the alike on the side? Hey there, budgeteers. It's a brand new year, and that means it's time for new habits, starting with your money. Take charge of your finances in 2025 with New Money Habits Financial Coaching. This isn't your typical financial advice. New Money Habits is all about giving you the knowledge, tools, and support to make confident money moves and build a rock-solid financial foundation. Here's the deal. We're offering a free discovery session to kick off your journey to financial freedom. That's right, no strings attached. In this session, one of our expert coaches will help you to identify your financial goals and create a better plan for your money. We'll help you master your money mindset, sharpen your money management skills, and keep you accountable every step of the way. Make 2025 the year you say goodbye to financial stress and hello to the freedom you've been dreaming about. Schedule your free discovery session today and start creating the new money habits you need to achieve financial freedom.
Absolutely. I would say number 1 is to open a business bank account. You've got to have a place to separate that business money out from your personal money. Yes, it will eventually become your personal money. This is why you're doing this for a lot of people. But you first have to separate it out and make it business income. So open that business account, and all the business income goes into that account first. And then you can transfer it over to your personal account. That's a non-taxable event. That means nothing, but you just want to get it in the business account. So that's number 1, get a business account. I often recommend people get an EIN, an employer identification number.
Mm-hmm.
Reason I like small businesses, even rideshare people, to do this is because your EIN protects your social security number.
Mm-hmm.
And tax ID theft is a thing. It's the real deal. And getting an EIN protects that, and it protects it in this way. Beyond rideshare, there's bazillion type of side hustles you can do.
Mm-hmm.
And if you go to work for yourself and maybe you're a website designer, someone hires you out, let's say New Money Habits, hire someone to create a whole new zip bang website. You're going to want that person's tax ID number. You're going to say, give me your tax ID number, because you want to track what you're paying them and report it as an expense to your business.
Yep.
So that person has 2 choices. They can give you their social, or they can give you an EIN. Now, I believe most people are honest and do the right thing when they get a social, but why risk it? Why open up the door to possible ID theft and misuse of a social security number?
Mm-hmm.
So you get an EIN. It's free. It takes about 10 minutes on the IRS website. So you get an EIN, and that's the tax ID number you use when you hire yourself out to do business for someone. And the business bank account your financial institution is probably going to want an EIN.
Mm-hmm.
Kind of cover two birds with, what's that saying? Kill two birds with one stone.
Yes. Yep. I was going to ask that because I'm pretty sure to open up a business bank account, that is a prerequisite. I could be wrong, but
I think most financial institutions want one. And I will say this, some people don't actually want to open a formal business account. So they open up a second, personal checking account or personal savings account and treat it like a business account. And they're using their social security number to do that.
And so would you recommend, like, is that a good idea? Like, or is that a bad idea?
It's neutral, to be honest, because if you have the discipline to just put your income for business in that separate account you've opened and just take all your expenses out of that same account, you're good to go. Yeah. It's discipline. It's kind of like using a credit card. A lot of people use a credit card. Credit cards are amoral. They're neither good nor bad.
Right.
But the opportunity to do something wrong or incorrect or not good for you,
right, yeah,
is huge.
Yeah, getting yourself in just a mess that you don't want to be in.
Exactly.
That potential is there, just like the potential.
Avoiding trouble with the IRS.
Yes. Yeah. So I wanted to ask you about the business checking account. You said open up a business checking account and have the revenue, the income that you're making from, let's say, rideshare or whatever else, go into that. For somebody who's specifically doing rideshare or food delivery, is it also then wise for them to, like, when they go to fill up gas in the tank, actually pay for that from the business account while you're ride sharing and doing those other things rather than from a personal account?
Great question. Great question. And so you run into a couple of potential issues if you use your business account to put gas in the tank for the vehicle you're using or rideshare, if you are also using that same vehicle for personal use. And most rideshare drivers are using their personal vehicle. Occasionally, I'll come across someone that actually bought a vehicle solely for rideshare. But I mean, that's it. That is their sole source of income. And they're making $100,000 just rideshare. That's it. So for most people, I would say don't use your business account to put gas in your car. Here's the reason why. It'll get a little bit convoluted, but we'll take a shot at it. When you file your tax return and you're claiming your Uber income, you have two choices on how to claim the expenses for your vehicle. First choice, very simple, mileage. Just all the miles you drove for business. Very straightforward. The IRS sets an amount. I think it's 57 cents or 58 cents per mile. It changes every year. But it's very, very simple, very straightforward. It's how many miles you drove, and your software that you're using is going to automatically calculate, bloop, here's the expense, here's what you get to claim. Very straightforward. The other option is claiming what's called actual expenses. This is where the gas in the car, the new tires, the maintenance, the oil changes, those things come into play. You are allowed a percentage of those expenses as an actual expense. So if you've kept track of all your gas that you put in the car during the year and you're using your personal account, you may claim a percentage. Let's say you spent, $2,000 a year on gas, and you drove 25% of the year for Uber. You can claim, what's quick math on, what did I say, 1,000? Did I say 1,000 or $2,000?
You said 2,000, so $500.
2,000, okay, $500. You can claim $500 of gas expense on your tax return. Now, you don't have to figure out that math. Any software you use will do that.
Right.
But so using your business account to pay for the gas in that particular instance is actually counter beneficial. It's not good.
Okay.
That's a little bit of tax planning.
Yeah. No, I appreciate giving our listeners an opportunity to think through. Maybe they were thinking about doing it as soon as you said business account, because that's where my head went. And now it's like, oh, well, maybe I won't, because also being mindful of almost what sounds like a standard deduction. I just use that term loosely, but like if I can take this amount of money, multiply it by all of my miles. I get to just take this as like a business expense versus tracking all of them and then also tracking the percentage of time. Like you said, if how the percentage
Yes,
of
and it's
time
not
that you
really,
drove,
and it's not even time.
right?
I
It's the
said
miles.
that, but it's the miles because again, what you are entering literally in the software, if you use actual expenses, you enter the business miles you drove. If you also had a job, the commuting miles back
Mm,
to your job, and then the total of all the miles you drove all year long. Church, the grocery store, kids' soccer games, visiting grandma.
you know,
All of these numbers are getting entered in the software, and the software is running that percentage
right,
for you. It could be something like, 23.874% of the time you drove for Uber or whatever.
right.
And that percentage is applied to all the money you spent on gas.
Excellent. All right. So getting an EIN and getting a business account
Business
are
account,
your
yeah.
top two pieces of
Top two.
advice to those gig workers.
If I threw a third one in, it might be make an estimated tax payment.
Mm-hmm.
That would be kind of the other third thing. But again, that gets more into, how do I know if I need to make one? That's really kind of getting into some basic tax planning. And I do mean basic. It's not deep and complex and difficult. It's just, a thoughtful 2 or 3 hours
Okay.
of what's going on the tax.
So now that we've done a sufficient job of scaring our listeners into like, I'm not doing any of this, tell them how
Right.
can they schedule some time with you to sit down and make sure that they're doing these things properly.
Yes, yes. So I love sending people to my website, which is www.proverbs1616.com. I have calendars all over my website on every web page. Anytime you scroll through, it pops up. Christine's calendar. Christine's calendar. Drop on my calendar. Schedule some time for us to meet. Whether we can wrap it up in a meeting, possibly. Who knows? Maybe there's some additional work that needs to be done. And
And
pop
then,
quiz, before you say anything, pop
sure.
quiz is the idea behind Proverbs 16:16 is actually to go look up, what is Proverbs 16:16? And for those of you in the
Okay.
listening audience, wisdom is better than gold.
Mm,
Insight better than silver. It's
I
not
love it.
about the money. It really isn't. What's going on behind the money?
How much better to get wisdom than gold, to get insight rather than silver? Which, in part, we've
Yeah,
done some of that today, right?
a little
I
bit.
love it.
A little bit, yeah.
And to that end, for any of our listeners who aren't already following us on Patreon, do that because you can find Christine's 2-minute tax tips and other great content over there. But where else can people find you, or what else are you up to that they should be on the lookout for?
Yes. If you want, you can go check out my book on Amazon. Or if you have an audiobook subscription, use one of your credits. It was professionally recorded, so you can listen to it. Save yourself a few bucks. You don't even have to buy it. Just go listen to it. You'll get a lot out of it.
Awesome. And then you get to
Sure.
control the speed and all of that. I can listen at 1.5
That's right.
speed,
Yeah.
or
Speed it up. A little chipmunk sounding. Yeah. But it's a very helpful book for people that are really starting up a business, whether that's rideshare, graphic designing, website designing, selling widgets out of your garage, whatever it is, or if you're even thinking about it, read through or listen to this book.
Well, thank you, Christine, for spending time with us today. I think this was an incredible insight to just a couple of the things that people in today's economy need to be thinking about, need to be mindful of, and need to plan for when it comes to avoiding trouble with the IRS, as your book is so aptly named. Thank you.
Absolutely. Thank you for having me, Nino. Appreciate being here. So just as a reminder, this is not official tax advice, although it might sound like it. This is education and literacy. Official tax advice should always be done under an engagement letter with the tax professional, whether that's accounting or even legal advice, anything of that nature. You need to be under the correct professional umbrella to get that advice.
That does it for this episode of the New Money Habits podcast. Remember, if you have any questions, make sure to hit us up on social at New Money Habits and follow us on Spotify, Apple Podcasts, or wherever you listen to podcasts. Please consider leaving a 5-star rating and review to help us spread this message of hope to people looking for a better plan for their money.